Hey traders, how's it going? Brandon Carter FX, aka Mr. Golden Ratio, and currently we are entering the chapter of sniper entries and exits. Sniper entries and exits. And basically, what it boils down to with sniper entries and exits is, you know, um, time frame correlation. So, taking a look at what's happening on the higher time frames. As you can see here, we are currently on the monthly chart, between the monthly and weekly and daily. But taking a look at what's happening on the higher time frames and correlation with what's happening on the lower time frames that kind of mirror what's happening on the higher time frames, if that makes sense. And if it doesn't, just rewind and replay. So sniper entries and exits, big part of trading, a major part of trading, because a lot of times the worst part about trading is, and I'm sure you've experienced it yourself, is entering a trade, going deep into profit, right? And for whatever reason, you may wake up the next day or 2 days later, if you're swing trading, right? And all of a sudden, you're deep in the red or significantly in the red as opposed to how deep you were in profit. And that all boils down to knowing when to enter precisely so you're not seeing ridiculous drawdown, and knowing when to exit so you're not giving back that money. So this chapter, sniper entries and exits, helps eliminate that, or eliminate that as much as possible, because obviously nothing in the market is guaranteed. It's all highly probable movements, with a proven system and trading plan. So let's get right into it. We're looking at the higher time frame, um, just to get a bigger picture. This is the monthly, and let me just stop right there. A lot of which people do not look at. They don't look at. They look at, ask questions like, "Oh, what time frame should we look at to trade? What time frame should we analyze? 1 hour, 4 hour?" They stay on these lower time frames, excluding the big picture. There is no single time frame to trade on. Let me repeat that. There is no single time frame to trade on. You look at all time frames to get the big picture of what's happening. Okay, so let's get into it. Monthly, very simple. People overcomplicate trading. It's not that complicated. It's really just human behavior and mentality that really messes up a lot of people. But so support, resistance, as we covered in the previous chapter, trend lines, whole numbers, Fibonacci, etc., etc. Right? So as you can see clearly here, we've got a very strong monthly support area that is now becoming, or looking to become, a strong resistance area to potentially fall further to the downside. So because of that, based on the higher time frame and even on the weekly, but very clearly seen on the monthly, my bias, I would say, would be short, to be looking for, although there will be long opportunities on this pair because of the nature of the market and how it moves in waves and the pullbacks and etc. 85 to 95% of the trades I would be looking for sniper entries and exits on this pair, if I was going to be trading this pair, would be shorting opportunities, because of the way the market is forming, it would appear that I would find more trades in my favor shorting this than I would going long on it. Okay, so that's that. Now let's hop down, and that can be seen pretty obviously, right? That can be seen pretty obviously. Lower highs, lower lows, right? Very strong support area, broke through, closed below, coming back up to retest as resistance to potentially fall down further south bearishly. That's based on the weekly. Monthly. Now pay attention, take notes. I hope you've been taking notes throughout this entire chapter. And if you haven't, start from the beginning. Don't skip over any section of this training, and take notes of, you know, um, of key points that I make in regards to maybe something that you overlook or have been overlooking yourself or never really paid too much attention to. Um, and just, you know, make the notes, make notations, even timestamps. Make, you know, take note of the minutes and seconds within the video that, you know, very significant points have been made, so you can come back and watch that particular area of maybe something that you need to work on, right? So now we are on the weekly time frame. Same area, right around here. Previous support, broke through, closed below, acting as potential resistance for the foreseeable future here, right? And as we already said, our bias for opportunities that we'll be looking for are shorts. All right. Because of that. So now we're on the weekly. Still seeing lower highs, lower lows, lower highs, lower lows. All right. Weekly. Dialing it down. Time frame by time frame. When people ask, you know, how did you catch it right at the tip, or how did you catch it right at the tip of the wick, and things of that nature, it's time frame correlation. Time frame correlation to get sniper entries and exits. You're looking for the same type movements to mirror what's happening on the higher time frames. All right, so now we're on the daily. We're going to break it down time frame by time frame. Now we're on the daily. Let's see what's happening on the daily. We are here. Now, doesn't this look familiar as to what I just showed you on the monthly? Right? I'm going to see if you can point it out before I say it. I'll give you a couple seconds. All right. Right in this region. Right here. Same type as I said, for sniper entries and exits. For sniper entries and exits, we're looking for to happen on lower time frames that mirror what's happening on the higher time frames for that time frame correlation to find those sniper entries and exits. So just like you've seen on that monthly, that strong support area, even up here, even if at the time we were here, same thing, but we're looking for the same mirrored movement. Strong support area obviously here, broke close below, now coming back up into that zone, into that area, no specific price point, but just in that zone to act as potential resistance. And as we covered in the previous chapter also, we are not coincidentally at the very strong psychological whole number of 0.9900. 0.9900. Okay? All right. So we've got that in our favor. Let's break it down now, going from the daily to the 4-hour. This is how we find our precision sniper entries and exits based on higher time frame, starting from a higher time frame. Now we're on the 4-hour. We're going to break it all the way down. All right. This is that same area. This is that same area that was on the daily, but now we're on the 4-hour. Previous support, broke through, came below it, coming back up into that zone, this zone here, confluence with 0.9900 to act as potential resistance. All right, what else? We see some swing, lower swing highs and swing lows, highs, lows, highs, lows, right? What we learned in the previous chapter. Fibonacci. All right, you can either, let's just see, what does it come down to when I do this? Oh, what do you know? Oh, what do you know? What do you know? Swing high to swing low, came up into the 50, which is in confluence with what? Previous support, acting as resistance, confluence with the Fibonacci 50 zone, and confluence with what else? 0.9900, whole number. I told you, no coincidence. All these things lining up. But look at where I started from to find my bias on position I would take, all the way from the monthly chart, weekly chart. You could even start on the weekly chart. I just like to use the monthly sometimes just to get a, you know, a very smooth idea of what's happening. But you can even, drop down and just start right at the weekly chart as well. All right, and weekly and daily. So no coincidence there. But I've gotten to the point that I don't even use the Fibonacci tool anymore, just because, without even drawing that Fibonacci tool, I can pretty much eyeball it and just look at it and be able to tell that it was at a 50% retracement. All right, so that's on the 4-hour. Okay, that's on the 4-hour. Now let's drop it down. Again, this is the chapter Sniper Entries and Exits. And take notice and note of the fact that I started all the way on the monthly chart and worked my way down to weekly, daily, 4-hour. Now we're going to drop down to the 1-hour. All right. Same area, a little more detail of what's happening, what's going on. All right. Support. That previous support area, boom, broke down, came up into that same area here to potentially act as resistance for further downside movement. Now we are starting to, get into a very nice, tight, tight entry with a tight stop loss, and for a potentially major reward based on what is happening on the larger time frame, with time frame correlation to find these sniper entries and exits. All right, now what was learned in the previous chapter, you guys already know. You should already know by now if you paid attention and took notes. Now that we're up in that zone, and as this, we're not even looking for trades until they come up into these zones. But now we have reason to look for, entries to get into this market. What am I about to do? You already know. You already should know. Boom. And when and if rules are met, these are highly probable trades. It just takes the patience, because people want to, make sure they don't miss the move, so they'll jump in early or whatever and completely mess up. So now we're starting to build a case to get short on this market. All right, this is the 1-hour, and we already know the reasons why, because starting all the way up, from the monthly, right? Starting all the way up from the monthly. So you already know what we would be looking for and waiting for is break and close below this trend line. You can either enter at market once that happens, or wait for a retest of the backside of the trend line after it's broken and closed below it on the 1-hour chart. and put your stops up above the previous high that was, because most likely it'll do something like this, come up here, come back down here like this, maybe go up to here, then come back down here, do something like this, boom, then break and close below, right? And at that point, let's say if it did, it did that over the next few hours, did that, came across, broke, closed below. Let's say our entry was here, then our stop would be about here. Our stop would be about here above the previous high. So you're only risking about 33 pips or so to go down to the next whole number of 0.9800, from 0.9900 to 0.9800, and you'd be gaining about a good 85 pips. So just about a 1 to 3 risk reward, just about, which is great, which is very great when it comes down to trading. But you see how I built that case, right? So let's take it even deeper, right? Let's take it even deeper, more precise. Let's get even more precision with it. All right, let's take it down to the 30-minute now. Following the same rules, just looking at the same things that we're seeing on the higher time frames, and looking for those same rules to be met and those same things to happen on the lower time frame, in correlation and confluence with what's happening on the bigger picture. It's literally that simple, literally. Okay. So now 30-minute, we literally worked our way up, down from the monthly all the way down to the 30-minute. Okay, so we've got our outer trend line, we've got our inner trend line, because you may say, you know what, I want to potentially, I have the patience, I can wait for this thing to drop, but I want to just get in at a higher price to short this thing, a better price to short this thing. And I don't necessarily want to wait for it to break this trend line, because I'll be getting in at a lower price, but I want to, take the steps necessary to get in at a potentially better price to short this thing. Well, now we got our inner trend line. All right, we've got our inner trend line. And what would we look for? What would we wait for? Same thing. Nothing changed. Same thing we would look for on the daily, same thing we would look for on the weekly, is the same thing we would look and wait for on the 30, hour, 4 hour, or whatever. So what would we wait for? Break and close below what? Here. So then, instead of it going here, coming up here, maybe coming down here, going all the way up here, and then coming all the way down here and breaking and closing below somewhere around here, now you could potentially get in at a price that's somewhere around here, much higher and much closer to that psychological number, with an even smaller risk reward. Let's say it comes up, breaks through here, comes and retests with a double top or something like that, comes down, breaks and closes below. Well, now you've gotten in here, you were able to get in here, and risk only 15 pips. Okay, risk only about 15 to 17 pips, but waiting for those same rules to happen, and on a smaller time frame that's in correlation and confluence with what's happening on the larger time frame. So now you're able to get in with the 15 to 17 pip stop loss, as opposed to waiting for on the 30-minute chart, based on the 30-minute chart, as opposed to waiting for 1 hour candle closure below this one, which would have put you at something like a 35 pip stop. That is how you get your precision entries and exits. It's really that simple, guys. It really is. You just have to listen to this course, take notes, have the patience to wait for these setups to happen, okay? And then don't be afraid to execute. And don't be afraid to lose either, because that will also happen sometimes. You may get a situation where you get a close below, right? You're entered, you got your stop above here, and then it may play around up in here somewhere. And just for whatever reason, one last time, it may want to come up and retest up here, stop you out, and then tank. But at the end of the day, you have to realize that you have the knowledge and the tools to find sniper entries and exits. So even if it did come back up for whatever reason, play around, spike you out, all right, spike you out of the trade, and then started to come back down, well, you know, you still know what you'd be looking for to re-enter again, and know that it's highly in your favor, that the trade is going to go in your favor, based upon the fact that we are looking at setups based on what's happening on the larger time frame that other people aren't necessarily looking at or paying attention to, because they are amateurs, noobs, whatever you want to call them. They just don't pay attention, lazy, you know. They, oh, I don't want to look through all those time frames. I just want to look on the 15, the 30, the 1 hour, and the 4 hour. I don't want to look through all the other time frames. All right, well, keep losing your money. You know what I mean? But so that's what we would wait for. That's what that is what it boils down to, as far as finding sniper entries and exits, and what that would end up looking like on the daily or something like the 4 hour is that same area. You'll end up catching the very tip of, it'll look like a wick, the tip of a wick on the daily chart. Okay, it'll look like the tip of a wick on the daily chart, and people will be looking at you like, yo, how did you catch that? Well, because you broke it down time frame by time frame by time frame, looking for the same rules to be met, and got a better entry because of time frame correlation and confluence with what was happening on the higher time frame. That's how. The same setup, the same way that I looked for this setup here and showed you guys how to look for this setup here, is the same way that you'd apply it to any other instrument, any other, whether it was stocks, whether it was cryptocurrency, whether it was another Forex pair. Let me just do another one. Let's do CAD JPY. CAD JPY, same thing. Look for the same thing for the same reason. And this, I didn't even have to go all the way up to the monthly. Just looking at the weekly, right? So we've got this move here. Boom, weekly, our highs, our lows, and got this support level here on the weekly, very strong levels. Boom, broke, closed below, coming back up to potentially act as resistance in these levels and tank further south. Let's find some confluence with what we've learned though. Let's draw a fib, see what it comes into. Oh, what do you know? Right in that 50 and 61.8 region. It's no coincidence, people. No coincidence. All right. But this is based off the weekly time frame. So narrow it down. Daily. Very simple. As it was coming up into that zone, what would we have been doing? Drawing our trend line. Boom. Got a break. Break and close below. We got it right here. You would have wanted to make your decision as far as your bias in which direction you were going to trade based on these higher time frames, but you always want to do those sniper entries and exits. Boom, strong weekly support here, broke through, coming back up to retest as potential resistance in the fib level of the 50 and 61.8 area, also in confluence with the, no coincidence, very strong psychological number of 85.00 whole number. So that being said, would have gone down to the daily, same rules to be waiting for the same rules to be met. Boom, got that break and close below. Our bias would have been short at that moment. So let's see on a lower time frame what would that have looked like when we got that break? The break happened right here. Boom. Broken and closed below. This is the 4-hour time frame. Got the 4-hour previous support. Close below. Come back up to retest as potential resistance, which is in confluence with that close below that happened on the daily time frame, which is in confluence with what happened on the weekly time frame of coming up into that previous support tag as resistance area, in confluence with retesting the backside of the trend line. And this is on the 4-hour chart. Let's see what that would have looked like on the 1 hour in that same area. See if we could have got a real precise entry. Boom, this is that same area coming back up to retest that previous support as resistance. What would we have done at this point? What would we have done based on the previous chapters? You guessed it. There's a trend line to be drawn, but we would have got a little more detail, because after that break and close below that happened on that daily, and it started to retrace and retest the backside and previous support here, it just kind of got a little messy. So we would have gotten more detail to see what was going on in that same area. Boom. And that's what it looked like. Got more detail. Now it makes more sense. What would we have done? And what would we have waited for? Boom. Drew the trend line. Boom. What? Got the break and close below right here on the 30-minute chart. And would have entered. Stop above the previous high made. 25, 26 points. Pips, right? 25, 26 pips or whatever. You would have experienced a little drawdown of about 10 pips, as you see here. But you would have caught that major move. And where would we have exited? At the next whole number. You would have caught a good 85 pips out of a risk of only about 25, 26 pips. And caught 80. That was a good 1 to 4 risk reward trade. Based on, where did I start? Weekly time frame. And finding and following the same rules on the lower time frame for the sniper entries and exits. It's really that simple, people. It doesn't get any easier than this. You complicate it. People complicate trading. The psychological, their greediness and their laziness combined. People, trading is easy. Trading is the same. You're looking for the same thing over and over. I mean, obviously without a trading process and plan and method, obviously it's going to be hard because you don't know what you're doing or why you're doing it. But when you've been given the tools such as I've given you, yeah, lives change. Lives change. So, as has mine, right? So that is sniper entries and exits. And that entry, let's just mark that, right? Because on a 4-hour and daily, that would have looked like, yo, you caught that right at the wick and watched it tank. So we're just going to mark that area where that happened, where we would have entered. Remember this X. Remember this X, because that's where we would have entered. Now let's go to the daily chart. What did I tell you? It would have looked like you caught it right at the wick on that daily chart. That X. Right at the wick. Very top of this bearish candle. And man, if you trailed your stop and just let this thing run, you would have caught nearly 200 pips, a good 180 pips. As far as the exit's concerned, you're just looking for previous resistance to potentially act as support of where the market could potentially turn back around on you, because these areas act as magnets, all right, of attraction or repelling each other. So your target, after that happened and you entered, you would have looked at what you would have looked for was, all right, so I'm shorting And this pair may fall until it finds support. And where is it going to find support? At where previous resistance was. Where was previous resistance? Well, let's just look to the left. Boom, previous resistance right there. Previous resistance. In confluence with what? It's not magic, people. It's not coincidence. 83.00 whole number. Boom. Boom. That's where you would have taken profit. All right. And if you really wanted to be safe, could have taken profit a little higher, you know, where that previous resistance was up here, but it just came a little deeper into it and came down here. But in regards to exits, that's what you're doing. And it's vice versa if you're going long. If you're going long, well, you're looking at your take profit area to be at where previous support was to potentially act as resistance and reject price at that point of which you want to be out the market with your profit. So entries and exits, chapter covered. Take notes, repeat, replay, watch over and over, brainwash yourself, learn it, know it, change your life. Next chapter, the psychology of trading.